call toddpoorrealty.com/book. It's a good time to save your time slot. I put the link in the chat too. And we're going to get started. This is the DFW first time home buyers class. Basically, we're going to teach you to not make these costly mistakes that we're talking about. I just put this in here because it's driving me crazy how many people that I'm calling or calling me are telling me that they're waiting for the market to crash. It's going to be just like 2008 again, this and that. There's a lot of YouTube videos with clickbait to try to get people to click on them. They get paid for people to click on them, but they take real data and twist it around. Right now, mortgage standards are nothing like they were in 2008. One of the biggest factors in the last housing crash was loose lending practices. Almost anyone could receive a mortgage with no money down. Now standards are much stricter and buyers are better qualified. They were throwing out loans like hotcakes. Prices are not accelerating out of control. In a normal market, the average home appreciates by 3.5% year over year. Prices are rising a little more than that in our market, but the difference isn't huge. Home values are currently rising at a healthy and sustainable rate. We have a very low supply of homes right now for sale. So our low supply will, it's a supply and demand will keep our prices high. We don't have a surplus of homes on the market. Before the 2008 crash, we had too many homes for sale, way more. Now we have a housing shortage, increasing wages are keeping homes affordable. While the home prices have been increasing, wages have been keeping pace. Mortgage rates are still low from a historical perspective, so it's still relatively affordable to purchase a home. And then homeowners have tons of equity in their homes. During the last crash, most homeowners didn't have much equity. When prices dipped, many of these people had to enter foreclosure because they couldn't handle keeping up with their mortgage. Now homeowners have tons of equity, so even if the prices fall, our market will be okay. On average, all the homeowners in the United States own half of their home. Or they've paid for half of their home. That's equity. This is most likely the biggest investment you'll ever make. It's a great opportunity to build generational wealth for your family and the future of your family. You guys are probably concerned, stressed out, intimidated, anxious, and uncertain. As a first-time home buyer, guess what? You're going to feel a lot of emotions. You may be asking, will I get approved? Am I going to be able to afford my dream home? Like the one you played with as a kid with Ken and Barbie? But you may not get it as pink. You may be stressed out. Maybe you didn't get the first house you wanted, or it's been a month and you still haven't found the perfect house. You may feel intimidated like David and Goliath in this insane market, which is now turning from a seller's market to a buyer's market. Buyer's market means there are more sellers than buyers, which makes it easier to buy. You may be anxious and uncertain. You may have to wait 3 or more days to see if your offer was accepted. I get stressed out about these situations too. So why it's so good to buy right now, 5 months ago when prices were soaring, you had to just put offers in on several houses and just hope and pray that you win one of the offers so you can buy a home. Right now, you can choose, I want a gas grill. I want tile in this house. I want an open floor plan. You can choose all these things right now because it's so easy to buy. And there's so many options. So many people are waiting. They think interest rates are going to drop, and they will drop a little bit. But guess what happens when interest rates drop? All those buyers come onto the market. Guess what happens if all the homes fall down 10% on price? All those people that are waiting come onto the market and drive them back up. I'm Todd Poor with TD Realty. I've been in the real estate business for 15 years. I do have a background in building homes. I also started a tiny home business in Midland for the oil field, and we only employed addicts, alcoholics, and people with felonies. We mainly pick up people that have a construction background that just got out of rehab, usually, and give them a place to live. I'm over 6 years sober from alcohol. I plan on getting my first multi-family home this year, and I'm going to turn it into a sober living home. Nicole is my transaction coordinator. She's been doing this for 20 years. She keeps my contracts in perfect order, so I can't make mistakes, and not many agents have one of these. So if I do make a small mistake, she's going to catch it. Here's my awesome team. There's my loan officer, Blake. He goes above and beyond for my buyers and myself. He saved a lot of deals for me. I don't get paid a dime for him to use you, or for you to use him as a lender. I just want the best deals for you guys. If I have the best rates, he compares 10 banks, I think, right now. If you have the best rates, then people are going to come to me. And we're really good about finding the best rates, pulling strings to get people loans. Yeah. But I'm sorry. I'll go through these a little quicker. We had a really bad deal about 3 months ago where there was zero communication because the buyers were using a bank in Delaware, and they wouldn't return text messages, they wouldn't return calls, they wouldn't return emails. And my clients ended up staying in a hotel room because everybody was just stuck. We put closing back 5 times. Blake called the owner of the company and kind of got this guy in trouble, but he saved the deal and got everything going. Okay, here we go. Yeah, please ask questions in the chat. Book a one-on-one. I'll go through these really quickly. I have only 5-star reviews on every platform. This is Kristen Montgomery. She's probably our biggest fan. She used both of us. We became really good friends, as I do with most of my clients. And we built a lifelong successful relationship for the future. They put reviews everywhere. They cooked me dinner a month ago, and we take turns sending each other gifts. I keep on getting cookies. They're really good, made from scratch. We got them a 2,200 square foot, 3-bed, 2-bath, new construction home for $305,000, and it's an awesome home. What are the steps to home ownership? Book a one-on-one consultation. You can talk to me, you can talk to Blake. We have credit repair. We're really good at credit repair, and you can talk to them. Credit repair is usually $50 to $80 a month, which isn't bad. Most of my clients do it 9 months or a year. They'll go up 100 points or more. What they do is they erase your history. I can't emphasize how important it is to get pre-approved for a loan before you consider buying. Getting pre-approved is the first step that you should always take when you're buying a home. We'll go over loans and all, getting pre-approved and all that here in just a minute. It is a lot of work to get pre-approved. You have to get all your documents together. That can take some time. That's where we lose a lot of people, is getting pre-approved. we send them the loan application and just never hear from them again. It happens all the time. I don't know why. They put it off over and over, but yeah, it's a huge costly mistake. And Blake, I can't stop thinking about you. So I'm going to turn it over to you.
Love it. Thank you very much. Thank you for the kind words. I appreciate that. Glad to be here. Glad to talk to all of you in this. And you know, hopefully you take something away from this. And he's right. Getting pre-approved is a process in itself. But the reason why we ask for so much up front is to get you pre-approved, and so we don't have to ask for so much later on. But yeah, so what are the steps to home ownership? Like he said, step number one, go to that link, toddpoorrealty.com/book. Set up your call with Todd. He'll find out exactly what your goals are, and he'll relay that to me and send you over to me. And then we'll have a conversation, and I'll send you the app. And then we work on getting you pre-approved, which is step two. Step three is first-time home buyer qualification. What can we do? You know, what can we get from the state to help you buy this home? Some down payment assistance, different programs like that. Once I have you qualified, once we got your first time home buyer assistance qualification, you get to go house hunting with Todd, which that's the fun part. You get to go look at homes, and he'll put you on an email list with your specific needs, and he'll send you homes. You can choose which ones you want to go see. Once you find the one that you really, really love, we get to number 5. You submit an offer, negotiate terms. And Todd and I were actually just doing that today with one of our webinar attendees, as a matter of fact. So we're getting her under contract. So you submit the offer, Todd negotiates the terms. He is the master negotiator, so he will get you the best deal out there. And then everybody signs and you're under contract, which is right where we want to be. And this is where the rubber meets the road. And we work for about 30 days and get that financing finalized for you. And through this process, we're going to ask for more documents and stuff. And, you know, as we get closer to it, we get appraisals and all that fun stuff. And then we get all the paperwork lined out, and then you get to close and move in. Last but not least, you do get to enjoy your life after making a great investment. And real estate is a great investment. It's a great way to build generational wealth. Definitely.
Yeah. And so me and Blake are very, very passionate about this. I'm very passionate about helping people. I specialize in first-time home buyers. And I know you guys are very vulnerable because you're putting so much money into your baby, you know, and you have to trust the process, trust the agents and the team. And then we have a very smooth transaction. And I care. Me and Blake really care. Sorry for the soap. I'm moving on.
So, yes, we do care a lot. We want to get you in a home that is yours, and with a deal that is, you know, best suited for you. So mistake number 1 is ignoring the first-time home buyer incentive programs. If the state wants to give you money to buy a home, you might as well accept it. Well, what is a first-time home buyer grant? Well, it is specific to your region. It is specific to each county, and it is based off the area median income, the AMI. And that is different per county. So Dallas County is going to have a higher AMI than, let's say, Denton County or Wichita County or Jacksboro County or, you know, Hood County. So it is dependent on your income. And that is a qualification that we need to address early on to make sure you are qualified in the area that you are looking in. Now they come in 2 forms. It's a forgivable second mortgage, which means they give you money for your down payment, but as long as you live in the house for 3 years, it is forgiven. You don't have to pay it back. So that is amazing. But if you do refinance or move within those 3 years, you do have to pay that back. So just live there, stay there. And then down payment assistance, it is a grant. So they give it to you, don't have to pay it back, which is really, really awesome. Area medium income. So how do the first time home buyer programs work? Well, Freddie Mac and Fannie Mae, they both have their own programs. It's Home Ready, Home Possible, and FHA. I use TSHAC, which is the Texas State Affordable Housing Commission. And they have the grants and the forgivable seconds. And here's an example. Speaking of FHA, Anita wants to buy a home. Well, I got her pre-qualified on an FHA with a purchase price of a new home of $300,000. The minimum down payment is 3.5%, which is $10,500. Well, FHA loans have an upfront mortgage insurance cost of 1.75. So now the total loan amount is $294,566. So the incentive that I got for was 5% of the total loan amount. So that comes out to $14,728. So now the total down payment is covered by the incentive with $4,228 left for closing costs. That could be title, origination, escrow, that could go towards anything. Maybe buying the rate down a little more, so definitely helps on that.
So I actually have an example from today for the woman that came to our first time home buyer webinar. And so the price of the house was $195,000, and she didn't want to pay a lot of closing costs. I think her closing costs were what, like, was it 14,000 or something?
Yeah, total we're going to be just under 15,000.
Yeah. So at the very end of the transaction, she would have had to pay $15,000 for all the closing costs. And that covers pretty much everything, doesn't it?
Yeah, that's down payment, origination, escrows, and title.
Yeah. So what we did, that price was $195. We gave them an offer. We thought we could go a little lower, so we gave them an offer for $195, and we asked for $10,000 back for seller concessions. So we really offered $185, but the loan was for $195 because they're going to give us that $10,000. So that $10,000 goes towards closing costs. So at the very end of this whole transaction, her down payment and all that stuff, $4,000, and she's good to go. And
it actually gets better.
Yeah, if you have some left over, then you can buy down your interest rate. You can buy it down 3% the first year, 2% the second year, and 1% the third year. You can actually lower your interest rate.
In her specific scenario, I was looking at it today, and she did qualify for the down payment assistance programs we've been talking about. So we're still working out the numbers, but she's going to pay almost nothing at closing. And with that, if I can work it correctly, between now and closing, I might be able to actually get her some money back. So but keep in mind, that not all deals are like that, but it worked out in her favor. And that's just a testament as to Todd's negotiating skills, getting that 10,000, and then me getting her qualified for the TSHAC, man. Dream team. That's all I'm saying.
Yeah.
Moving on. Types of mortgages. A conventional loan is Well, first of all, who has heard of Fannie Mae and Freddie Mac, other than what I've said in the webinar?
I have.
I know you have multiple times. Well, a conventional loan is a loan that fits the Fannie Mae and Freddie Mac guidelines, and they are government-backed entities. They set the guidelines for the conventional loans. Jacqueline has heard. That's awesome. They set the guidelines. They set the loan limits. They tell us, that the conventional loans need to look just like this, and we follow those and get them into that. Number two is the FHA. Now, this is a government insured loan. So it does come with an upfront fee that we talked about, the mortgage insurance, the upfront mortgage insurance. It is insured by the government. So should, heaven forbid, anybody default on the loan, the government is there to pick it up. Number three is USDA. It's another government insured loan. So there is an upfront fee with it, and it is area specific. So you need to be purchasing in a rural area to use the USDA. And what's great about USDAs is it's 0% down. It's a government loan. You don't have to put any money down. You do have to pay the upfront fee, but other than that, it's zero money down. It does need to be in a rural area, and there are income limits, and they are based off that AMI as well. So Dallas is not a rural area, but Josephine is. Anna is. Granbury is. And last but not least, number four, we've got our VA loans. Do we have any veterans with us tonight?
My grandpa and my uncle.
Well, you tell your grandpa and your uncle thank you for their service, and they qualify for a VA loan, which is well deserved. It's a great deal. Now, it only qualified veterans and active duty military can use this. Again, 0% down. Actually have the best interest rates comparatively to the others. So well deserved loan for VAs. Now, keep in mind with all four of these types of mortgages, the requirements may vary depending on the lender. It made, like, some lenders, you might have to fit in the tight little box. Some lenders, a little bit more loose. But keep that in mind. There are overarching guidelines, but we do need to, they do fit in different boxes. Anyway, loan documents. Now, we will ask for these up front with the pre-qualification. Number one is the driver's license or identification card and a social security card. We do need to know who you are. We need 2 years of your residential history. And we need to know just where you live. Income verification. That was the name and address of your employers, all your employers for the past 2 years. We will ask for 2 months of pay stubs and bank statements for your checking or savings, but mainly the account that you're going to use for your cash to close. The part of the income verification is we do need W-2s for the past 2 years, and we will need copies of your most recent tax return if you are self-employed. And for self-employed people, sometimes we will ask for the profit and loss statements, but we will definitely ask for those tax returns for the past 2 years. Any additional income like child support payments, alimony, social security benefits, etc., we do need that. We will ask for that. We can use that for your qualification. It does help, as well as a list of the assets do you have. And that's all built, the assets are built into the application that I send you. So it makes it really easy. You can just list them on there. Super simple. So let's talk about FHA loans. The Federal Housing Administration loan. An FHA loan provides mortgage insurance on loans made by FHA approved lenders throughout the USS, aka this guy. Well, what are the benefits of an FHA loan? Well, it's a low 3.5% down payment with a score of 580. Now, with a credit score as low as 500, with 10% down, we can get it done. So with these credit scores, keep in mind, these are rock bottom credit scores. We can get it done this way, but it's going to be an expensive loan. Your interest rate will be high. So that's why we offer credit repair. We offer to help you get your credit boosted so we can get you an extremely affordable loan. We can do it with these, but we prefer that your credit scores be 640 or above. Those are the most affordable loans. Credit or FICO, your FICO score is your credit score. Easy refinancing with FHA Streamline. Low mortgage rates. FHA loans tend to have the lower mortgage rates. Now, higher DTI ratios are accepted with FHA. So who knows what DTI is? Anybody? Anybody? Debt to income. All right. D to everyone. Jennifer knows. Okay. You guys have done your research, or you're Googling it right now. I don't know. But I'm going to say you did your research. So debt to income, it's a debt to income ratio. And the ratio is your income, your monthly debts divided by your income. And that gives us a ratio, and each loan program has a DTI limit on there. With FHA loans, you can choose between a 15 or 30-year fixed rate or adjustable rate term. We've stayed with the fixed rate recently. We're not in adjustable rate mortgage territory. Should interest rates spike up into like the 10, 11 range, we'll talk about adjustable rates, but we're not there yet. So like I said earlier, down payment assistance programs or grants are accepted with FHA. And Todd, getting onto what you were saying earlier with the $10,000 that you got for our mutual client, the seller can pay closing costs up to 6%. What does that mean? Well, on a $200,000 loan, the seller can pay up to $12,000 in closing costs. That they could pay title, they could pay origination fees, they can buy the rate down. There's a ton of different things that they can do for you on there. So we definitely try and utilize that, especially in this buyer's market. So a conventional loan is a home buyer's loan that is not offered or secured by a government entity. It is available through or guaranteed by a private lender or the two government-sponsored enterprises, Fannie Mae and Freddie Mac, like I mentioned those earlier. So the conventional loans are great loans. We utilize those a lot of times for investors. So FHA versus conventional. Minimum down payment on an FHA is 3.5 and a conventional it is 3%. Minimum credit score is 580 and conventional is 620. So the maximum DT, again, so with these credit scores, those are rock bottom scores. We want to get you at least 640 no matter what program you're on to make it the most affordable for you. Maximum debt to income ratio on an FHA is 55%, and on conventional it is 46%. So the loan limits for 2022, and these actually just went up this year. 5 days ago they went up. So for 2023, the FHA loan limit is $472,300, and for conventional, it's $715,000. So they went up. Which is great news. Anything above that 715, we are looking at a jumbo loan, which they have different guidelines. So income limits. When I say income limits, keep in mind that the government on your FHA loans and Fannie Mae and Freddie Mac on your conventional loans don't put a limit on how much you can make. They want you to make as much as possible so you can qualify for the house you need. These income limits are for Dallas County when we include the down payment assistance programs. So the FHA income limit for the down payment assistance program in Dallas County is $97,400, and on a conventional it is $76,480. So minimum out-of-pocket contribution for each of these loans is the down payment. FHA, it is 3.5%, and conventional, it is 3%. And those can be gift funds from your aunt, uncle, brother, sister, grandparent, whomever. They can be the grants that we talked about, or those forgivable second mortgages. Absolutely. Really great when the state wants to help you out in buying that home. Yeah, I will answer your questions shortly, and we'll talk about that income. What you can and can't use for down payment and closing costs. So real quick, down payment plus closing costs equal your cash to close. So just some vocabulary words there for you. So what we can use is your checking and savings account. And that's normally what people give us. We will ask for those bank statements for your checking or savings. Number two is your 401k or retirement accounts. Now, these accounts generally have a terms of withdrawal in them. So if you're pulling your money out before, I think the age of 63, 65, depending on the account, we can only use like 60% of that. So those terms of withdrawal do come into play. Sometimes you have to pay taxes on that. So we do need to know all of that, but we will be asking for the financial statements on there as well. Like I said earlier, gifts from family members, we will be asking them for the financial statements from the donor. So sometimes our grandparents don't want to provide those. They don't trust banks. They've been through a couple of recessions. It's understandable, but we do need those if they're going to give you $10,000, $15,000 for your down payment. And last thing you can use are stocks, bonds, or cash. We do need financial statements. So when it says cash, you can't show up to closing with that $10,000 or $15,000 in a duffel bag and slam it on the table and say, give me a home. Not going to work. We can't do that. It does need to be documented. We do need to know where the money is coming from and where it is going. So when we say cash, it's in the form of a cashier's check, because we can follow that right out of your bank account and see where it was to begin with and when it came out. Now, we cannot use money orders. Make sure everybody understands we cannot use money orders, because you could have taken that duffel bag full of cash, slammed it on the counter at Western Union, said, give me money orders. And they probably would, but we cannot accept those. Now, things you cannot use. You can't use another loan. You can't go down to the credit union and get that $10,000, $15,000 from them and have them wired over to title. That doesn't work. You can't swipe your credit card for it. Both of those would actually mess up your DTI and your credit score, and then your DTI and your credit score, and then you might not even be approved for the home. You cannot use undocumented cash. We need to know where it comes from. That's the Patriot Act. We need to make sure that people are not funding terrorism or laundering money through real estate. So buyer's eligibility based off the underwriter review. Number one is your ability to repay the loan. Employment verification, that's the 2 years work history, your total income, and I will calculate that once I get your pay stubs, your monthly debts, and then proposed monthly payment. And all that goes into your DTI like we talked about. We need to stay within those ratios. Number two, your willingness to repay the loan. your credit report. We're definitely going to look at your credit report, see what that says, your payment history of previous loans, rent, bills, etc. And what is the use of the property? What are you going to use it for? Are you going to live there as your primary property? Is it a second home? Is it an investment home? Are you moving mom and dad next door to be closer? Are you buying a home so your kids can have a place to stay to go to college? You know, what's going to happen with the property? What do you plan to use it for? And the idea behind that is if it's your primary property, you're more likely to make those payments every month because you need a place to stay. And number three, the collateral. Is the property eligible for the loan? And we get an appraisal, and the appraisal will determine the value. Does it meet the value that you agreed upon with the seller to purchase that? If it didn't, we need to know why, and we'll figure that out. We can always contest that and get that figured out. But those are the three main things that underwriters look at. Who knows what an underwriter is? Okay, 5 minutes. Let's see. Let's pull up this chat. I know there are quite a lot of questions. I can hear you. I can hear you. All right. Endemia. Are the interest rates higher on the down payment assistance for the state of Texas? They do generally run a little bit higher. Now, it is situation specific. I have had a client whose par rate was at, I think it was like 6.25, and at that point in time, the TSHAC rate was at like 5 7/8. So she got a little bit of a break there. Now that isn't every single one, but sometimes that does happen, and they do generally run a little bit higher on those. But you are getting, you know, a few $1,000s for a down payment. So after those 3 years, you know, we can definitely get you refinanced into a lower rate with, you know, absolutely nothing out of your pocket. Generally, it's nothing out of your pocket. Credit or FICO into that debt to income. Oh, lots of questions. Can you explain the income part? Prudent V, specifically which part? Like, how do I calculate income? Are you hourly? Are you salary? That's generally how we calculate it. And it's based on a monthly. So if you're just throwing numbers out here, if you're making if you're making $120,000 a year, we divide that by 12, and you're getting $10,000 a month. So that's how we do it that way on the salary, and it is based on, are you paid twice a month or every other week for salary, and then for hourly, it's based on how much you work that week, and like how many hours average you work. When it comes to like commission and bonuses and stuff like that, there's a whole nother process. More than willing to get into your specific situation on the phone call. So like book, and we'll definitely go over that.
Hey,
What about?
hey, he's asking income limit for FHA or conventional. What he was asking.
The income part. There without down payment assistance, there are no income limits. You can make millions and millions of dollars and qualify for a home. They don't put limits on that, because if they did, you'd be limited to what homes you could buy. But with the down payment assistance, the income limits are based on the county AMI. So like in Dallas, the income limit for, I think, a 4-family home is 113,000 for that family. So with that, a 4-family home, I believe in Wichita County is like 85. You know, and that's because there's not as much income in Wichita County as there is in Dallas County. Again, they are area specific, and that is definitely something that I look at once we start looking into that first time home buyer. What about inheritance? How do you prove? So if you just inherited $25,000, and we will see it deposited into your account, and there are two ways to go about this. We can season the funds, let them sit there for 2 months, and then get you under contract, or we paper trail it. We would ask for a copy of the will explaining exactly what it is you got and how it ended up in your account. Everything comes with the paper trail.
Hey, guys. So we're halfway through. We're just answering questions right now. Please click on the chat icon, ask us anything. We've gone through a lot so far, and hope you didn't miss anything. This is going to be recorded. Just text me or book a call, and I'll send you the YouTube video.
Yeah, very nice. Let's see, man, a lot of questions. I love it. Falitha, let's see, can someone go on the loan with you for income purposes? Absolutely, absolutely. We will pull their credit as well, and look at their monthly debts, but absolutely, if we need more income, that's usually where we go as a cosigner. They tell you if you have enough to pay the mortgage. Yes, we do. That's a huge part of the calculation. Do you guys suggest the FHA loan if people's credit isn't good? Generally, I start with FHA loans because they right now they have the better rates. So I want to get you the best rate out there. So I good credit or not, I look at FHA first. Now, if your credit is under that 620, I automatically, FHA is the way to go because we can't use it with the conventional. So yeah, absolutely. But we want to get your credit as high as possible to get you the most affordable loan. So Faith, book that call, and we'll definitely go more into depth with your situation on there. Okay, that should that. What about the Freddie Mac? What about the Freddie Mac home loan? Do they have it in Texas? Absolutely, yeah. Yeah, Freddie Mac and Fannie Mae, the Home Ready and Home Possible. We do have that in Texas. I actually was working on one earlier today. So yeah, that's nationwide. What if you don't have the physical copies of your W-2s from the last 2 years? Is there an alternative? Yes, as long as you can get it in we actually prefer it. We prefer these in PDF form. It's the easiest. We don't, I have had clients come and drop off, big packets of paperwork, which is fine, but we just end up scanning them in anyway. So absolutely. Let's see, can we buy fourplexes instead of a home? Yes, but that goes into investment properties. So a little bit different, structure to that loan. There are different guidelines. Do we require any specific documents from the builder before booking a slot with you? No, if you've already talked to a builder and they've given you a quote, I would say give that over to me. Let me take a look at that. More often than not, I can beat it. Yeah, if they've given you a quote or a loan estimate, yeah, definitely. And if you are talking to a builder, please make sure you call Todd. You definitely, whether you use their lender or me, you definitely need Todd on your side for that. He will get you the best deal. The builders are out there and they're trying to shove people in homes. So please at least call him. Okay, last question, then we'll move on. If you buy down the interest rate with the forgivable second mortgage, would that conflict with the 15 or 30 fixed rate? Okay. Let me package this. So the 15 or 30 year, that's how long the loan is, no matter what interest rate you have. And that is not affected by you buying down the interest rate. Say it's a fixed rate for that long, period. Now, with a forgivable second mortgage, you cannot buy down the rate. They give you that rate. They tell you, you have to use this rate. We're going to give you this money, but you have to use this rate for at least 3 years. So it's a bit of a give and take when it comes to the forgivable second mortgage. But after those 3 years, we can refinance you down to a lower rate, and that's no problem at all. You'll live there long enough, and we can use the equity that you gained. Jacqueline, we'll come back to you. I know we've been longer than 5 minutes on this, and I know Todd gets mad at me when I talk too much. So number 2, not getting pre-approved. All right, pillars of mortgage approval is credit, income, and down payment. Pre-qualification helps you determine how much you can afford to spend on the home based on 3 factors. Your credit. So we're going to look at your credit score, what your report says about you with your total debts. Number 2, your income, employment history, and income calculation. Have you had your job for 2 years? Have you had a job for 2 years? And I'll calculate your income. 3, your assets, money used on your down payment and closing costs. How are you going to pay those? We need to know that. Pre-qualification can help you determine what house you qualify for. You don't want to get under contract on a $500,000 home when you're only really qualified for $400,000. You end up losing earnest money, and it gets really, really bad at that point in time. And then it can increase your bargaining power when negotiating with the seller. I get you pre-qualified. I talked to you and Todd about how much. You guys go find that home. You're ready to put in an offer. Todd gives me a call. He says, Blake, we want to go put an offer in on this beautiful home for $450,000. He tells me the address. He tells me the offer. I tell him what you and I talked about down payment wise, and I fill out a commitment letter, send it to Todd. He puts that in that offer package, and it just makes everything more appealing when they know they don't have to wait on you to get your financing in order, because it's already there. It's already ready to go. And Todd, I mean, you can speak more on this than me. You talk to the seller's agents.
Yeah, well, I have it happen all the time where we'll go out looking at houses. I'll ask, okay, are you pre-approved for a loan? They'll say, yes, it's all taken care of. We go look at a house. It's happened on a Saturday, and he wanted to put in an offer. Sometimes they have offer deadlines where it was Sunday at 5 p.m. So you can't put in an offer in after 5 p.m. They're going to review offers then. And it was Saturday. I asked for his pre-approval letter. He said, oh, well, I've been going to this bank for 30 years. It's no problem. They'll write me, they'll cover me. Well, you have to have that letter. You have to have already talked to somebody. And a bank's not going to open till Monday morning at 8 a.m. I don't know if Blake can squeeze you in that quick to get pre-qualified. Probably not. I mean, you need to get pre-qualified before you go look at houses, because one, you're not going to know how much you qualify for. You may be looking at the wrong price range. Always get pre-qualified before you plan on buying and before you get. Yeah, you can. They can check your credit and everything with one lender, and then you have 30 days for another lender to check your credit, everything, and give you rates. So if you are buying with a builder, take whatever they gave you. If you talk to their financing team and give it to Blake, let him explain everything, that he can probably beat it. But yeah, get pre-qualified.
Yeah, it helps me estimate your monthly payment, and it also helps me figure out which loan program best suits you. because sometimes there are guidelines that we need to address early on. So, loan pre-qualification tips for simple loan approval. And these actually aren't just for approval. They go throughout the whole loan process until your loan is funded. You close, you sign everything, and then, the bank has to fund your loan. So do call us if you have any questions whatsoever at any point in time. Like you said, we've worked till midnight getting people done. We were texting back and forth last night on a mutual client at like 11:30 trying to figure it out. So please call us at any point in time, email us, text us, whatever you got to do. Number two, continue living in your current residence. You don't want to go ahead and sell your house or break your lease without having another place to stay. You will end up homeless or in a hotel, and we don't want that. Continue paying your mortgage or rent. Do not skip any payments on anything. This will affect your credit. We don't need any of that. And continue to use your credit as normal. So with your gas card, just use it for the regular gas. Don't go overspending or anything. Keep working at your current employer. This is big because it shows a very stable work history. Now, some people do have to move for work, and that's fine. We can work with that. We do need a little bit more paperwork to make that happen. And sometimes underwriters, tend to dig a little deeper into those situations. And when an underwriter digs deeper, it's always more paperwork. So just stay at your current job. Let's make it easy on everybody. Switch jobs afterwards. Let's see, keep your same insurance company. They know you, they know your budget, they know what you like. Sometimes you can bundle everything together. If you do have someone or if you do have a company you're not happy with, I can refer you out to someone. My man Gavin really takes care of people, and I'll refer you over to him, and we'll get you set up. Stay current on all your existing accounts. Again, make your full on-time payments. Not only will that keep your credit intact through the process, but it will help you build credit through this process. Expect requests for additional documentation throughout the process. So through the whole time, we are going to ask for more things. We're going to need a letter of explanation for the most recent one was our vehicle warranty. She was paying a vehicle warranty that wasn't showing up on her credit report, so we need a letter of explanation for that. Again, underwriters need to know that their job is to make sure you can pay everything back, so they ask all the questions. Now, a big list of don'ts when it comes to pre-approval: do not make any large purchases. We know you just bought that $500,000 house and it looks great. Got all your furniture in. It's going to have all your furniture in there. So on the way to closing, you want to buy that Porsche and put it out front. It's going to look amazing, but that will knock you out of qualification. Do not do that. If you're going to buy that car, you wait till afterwards. That is literally shooting yourself in the foot. You got a great car now, but you don't have the home to put it in front of. Don't change bank accounts or make any large cash deposits. Anything $2,000 or more, then we need to source those funds, and we start getting into a lot more documentation. Don't transfer balances around because, again, we have to source funds and figure out where the money's going and where it's coming. Let's see. Do not close any credit card accounts. Keep your credit intact the same way you've been using it. Don't close anything. Sometimes we'll ask you to pay stuff down, but don't close it. So just don't close any of it. Don't consolidate your debt onto one or two credit cards. Leave all your debt where it is and continue those monthly payments as stated. Do not apply for new credit or take out a new loan or co-sign on a loan. There will be an inquiry, and that will show up. Your DTI will go up, and your credit score will go down. And with those three things, you're knocked out of approval. We don't want that. Um, you shouldn't do this whether you're looking to buy a home or not. Don't max out or overcharge on your credit card accounts. 30% is the magic number. So keep it under 30% and you are good to go.
Yeah, I've had client 4 months ago bought a car while under contract, and then just recently went to Las Vegas and maxed out her credit card while she was looking for a home.
Man. Mistake number 3, using your bank. So bank penalties are expensive. We all see the hidden fees. We all see the things that we didn't realize were there when we were opening the account. No one told us about. Bank penalties, they add up, they get expensive. And most banks will charge an origination or discount point on your loan. You got to pay for the interest rate, unfortunately. Granted, we are seeing a lot more of that in the current market, but that's, it's always more expensive with banks. In large banks, you're just one of thousands of clients. To them, you're just a number. The teller, Susie. You've gone to her multiple times. You talk to her through the drive-through. You say hi, and she, about her kid Tommy, but she's not going to be the one doing your loan. Their loan officer is, and I guarantee you'll talk to them once after you're pre-qualified, and that's it. So you're just a number. Large banks typically have stricter guidelines that will not cater to specific situations outside their general box. You have to fit their box, and otherwise it doesn't work at all. Otherwise you don't get the loan. Unfortunately, with lenders like me, I have a good relationship with my underwriters. So if there's a question, if there's something, a lot of times some of the stuff they come back with, I can just give them a call and say, hey, here's the situation. Single mother trying to get into a home. Let's do it. I know you're seeing this, and this, but this happened here, and this happened here, and this happened here. And we can usually get it done pretty well. But large banks may not offer down payment assistance programs. A lot of times you don't fit that box and they don't want to go the extra step, which is unfortunate, because again, if the state's going to give you money, you might as well use it to pay for your down payment or your closing costs. So that's mistake number 3, the banks.
You there?
Yeah.
Yeah, sorry. Yeah, so I've been in some bad situations with banks. A lot of the time they'll say, okay, you're qualified for 350. Go do whatever you want. With Blake, he's more of a financial advisor. We're going to make sure you don't get yourself in a tight situation and have to foreclose in a little bit. Like I was saying, we really care. You're getting one-on-one experience. We answer our phones from like 7 a.m. till 10 p.m. We're always working. So that's a big difference.
Yeah. Number 4, buying directly from a builder. We kind of touched on this already, as a matter of fact. The truth about buying straight from a builder: closing cost assistance can be bait for a higher interest rate, which could cost you more in the long run. That's very, very true. I've seen actually a couple contracts come through recently where the home isn't going to be done for 30 or 60 days, and the builder's promising these really low interest rates, and but they're overcharging. Like, legally they can't charge that much. It's a bait and switch. So they bait you in to use their lender, and then before closing they switch and say, oh, the market shifted. So that's a huge one that I've been seeing. And a realtor works for you and a sales agent works for the builder. Definitely keep in mind, when it comes to builders, their sales agents and lenders their job is to put people in the builders' homes. Doesn't matter who they put in there. They want to put people in the builders' homes. Todd and I, our job is to put you in the home that you choose. Todd will go find it. I'll make sure you got the money. We're working for you. Builders, lenders, lenders, and sales agents work for the builder. And one thing to definitely keep in mind is Todd and I, we don't get paid until you close on your home. So we're fully vested in getting you in the home that you want.
Okay.
You know, and yeah, Todd, I mean, you deal with the sales agents more than I do.
Okay, so what we're actually getting at is you can buy from a builder. But you would want a realtor representing you when you buy, and it's free for me myself to represent you. The sellers of the home, they're the ones that pay me. So it's basically like, so you hired me. The first time you go see a builder, don't sign any contracts until you let me know that that's what you're doing, or tell them up front that you have a realtor. If you sign all the paperwork at the beginning, they won't let you, later on, they won't let you say, oh, this realtor's representing me. I forgot to say it at the very beginning. Yeah, they won't let you do that. You'll be on your own. And mainly what he's talking about is the builder's lender. They'll say you get 10,000 back, we'll give you a 4% interest rate, all this stuff. And then before you close on the real loan, they'll say, oh, the market shifted. It's 7% now. We're sorry. Everything goes up. Everything turns into a mess. So sometimes you can use the builder's lender, but always get what they offer you, a sheet of your loan offer, and give it to Blake and let him go through it and make sure you're not getting screwed. And they're not, charging you for all these extra things. Me, myself, I read the contracts for the home. I let my transaction coordinator read the contracts and make sure there's nothing goofy in there, that doesn't make sense or that's going to get you in a bad situation. So it's free. It's free to use me to buy any house, but I would definitely recommend that. Builders can be tricky. They can get you into bad situations sometimes. Moving on. Oh, and skipping a home inspection, brand new builders, they'll want you to skip a home inspection. Oh, this is my equipment. So I've built houses before. I know how to build a house from the ground up with my own hands. So when we go to look at the house originally, and you say, okay, I like this house, so I'm going to do a pre-inspection. So I'll go check the air conditioning system, make sure it's putting out the right amount of hot and cold. I measured the rooms and everything. I use this and a system to check the foundation and make sure there's nothing wrong with the foundation in different areas. This is actually a camera with, it goes down in the plumbing. I can go put the camera all the way down through all the plumbing, see why this sink stopped up. Sometimes it's roots from a tree or something. And then, it's a pre-inspection. I'm going to tell them, we're not buying this unless you guys fix this. And then, I have a drone to look at the roof and chimneys and things like that. And new builders, they'll say you don't need an inspection. It's already inspected, but you always want to get one in there because once you sign the papers at the very end, there's nothing you can do besides the home warranty. But the builders themselves aren't going to come in and fix a bunch of stuff unless you see it right then and there. I mean, that's something, I don't know any realtors that offer these things. So
I don't either.
Well, I kind of jumped the gun, but this house right here, I don't think you would need an inspector. You need a bulldozer. Yeah, so you purchase a house unaware of deal breakers, you lose your negotiating power. What they mean by negotiating power is, so you get a house under contract, you have an inspection the next day, hopefully the next morning, you get the report. By the evening, you get a list of things that are wrong with the home, and then you can do some more negotiating and say, well, you got to fix this, and this, or we're not buying the home, or you're going to have to give us $5,000, or we're not buying the home. So that's what they mean by negotiating power. Yeah, you risk having lots of problems such as mold, radon, and carbon monoxide. You miss having a forecast of future repair costs, and you're oblivious to illegal no-code additions or in remodels. So they'll give you a survey. You have to have a survey of the home pretty much every time. And you're like, wait, the survey says 1,600 square foot and it's listed as 1,800. And they could have turned a garage into a room, enclosed the back patio. Well, you have to have a permit to do those things. And if you don't have a permit, it's going to look weird on the survey. And if you buy it, you can be fined for all those things. Yeah, so I'll always make sure there's no illegal additions.
Wait, hold on one second. What is radon?
Oh, yeah, radon is usually formed when you have cracks in the foundation throughout the house. It's formed when the cement and the dirt kind of mix. It forms a gas and it seeps up through the floors, or if a wall's kind of connected to some dirt area with cement. And it's actually the #2 leading cause of lung cancer in the United States.
Oh, wow.
And yeah, you don't want that. It's not something you can see or smell. It's a secret killer. Choosing the wrong realtor, I'll go through this quickly. Drops the ball in communication. Communication is everything. That's why it's good to have a whole team of experience. I know your cousin may have just got his real estate license and you want to help him out. I often walk the other agent through the process because they don't have any idea what they're doing. But be careful, make sure they know what they're doing, make sure they're keeping in contact with the title, with the lender. I've worked with all these people before, so communication is really good. I can call them or text them anytime. Real estate is a side gig. I think that explains itself. They can't make it as a realtor, has their own agenda. People will be pushy and try to push you into a house, and not care about if you're in a bad situation. Unfamiliar with the market, I study the market daily. I get market updates, market forecasts. I study each and every section of DFW. Runs late or no show for appointments, not a great negotiator, lacks marketing skills, acts dishonestly or unethically. You guys can see that I have good marketing skills because you're here. Is over eager to please, acts as a messenger rather than guiding you through the process. Oh, this is demographics for crime. We go over things like this if you're trying to find the right neighborhood. That's because of the airport right there. This is just the Dallas, Collin County area. Soil maps, if we think, we want to look in the future and make sure you don't have any problems with foundation. Most of the soot and everything runs off from the Trinity River, so we can tell which areas are more prone to have foundation problems. I use niche.com a lot to kind of just check out the neighborhoods, see what everything's rated, schools and things like that. Schools are an important thing for a lot of people, getting in good schools. So how do you guys feel now? Are you excited, confident, informed? We have some questions we're going to answer. Be ask us anything. Click on the chat, read through the chat and see what everybody's saying and ask us anything, and be sure to book a call, for your specific situation. And we'll get you going, even if you're buying in a year, 2 years, we'll get you headed in the right direction and not call you like every week. If it's a year, I'll probably call you in 9 months. I'll set a time. And yeah, I would love to walk you guys through the process and help you out.
So back to Jacqueline's question, is there a way in which you can pay your home off more quickly? Absolutely. So there are quite a few different ways. The two main ways to pay it off sooner is you can pay more towards the principal each month. And as you pay more towards the principal, the less interest you pay over the life of the loan. And as the principal goes down, the life of the loan goes down. And you want to pay off the principal because that's exactly what you owe. So each month you just pay more towards that. The second way is by paying like twice a month. So instead of like paying your full mortgage payment twice a month, like 2 times a month, you break it up. And when it's broken up, you end up paying $150 to $200 more per month. And I can share a calculator with you, but book that call. We can talk more about this. Definitely get more into depth. But you end up shaving between 2 and 4 years off of your loan that way. But that's a great question. And my loans, there are no prepayment penalties. So hold on the loan for a year, and if you win the lotto, pay it off. Let's see, is what
someone was asking earlier, what's a good amount of money to have in your bank account? What will look good for banks?
So that's a great question, as a matter of fact. So it depends. And the reason why I say it depends, you want to look at it like this. You want to have your down payment in your account, and you want to have at least 6 months reserves. And you will have no issues. You don't always need 6 months reserves. But when I say reserves, 6 months worth of mortgage payments. When I say 6 months reserves, like say your monthly payment is $2,000, well, that's $12,000. They want to make sure you've got money in there, so in case you lose your job, you can pay your mortgage while you're getting a new job. So down payment, or excuse me, cash to close plus 6 months, and you've got plenty in there. Granted, that's not always the case, and it's hard to save up that amount of money. But plus, it also depends on how much you want to put down. So, but I tell you what, I'm not sure who asked that. Book that call. Let's talk about it in our phone consultation there. Definitely. How far in advance of starting this process should you avoid doing those things? If you just got a car a year ago, would that be okay? So, yes, a lot of those things, I assume that's the do's and don'ts on the pre-approval. A lot of those things, just, you shouldn't do that anyway. When it comes to buying a car a year ago, the reason why it hurts is it hurts in the pre-approval and home buying process is we have to use that monthly payment towards your DTI. If you got the car a year ago, we will still have to use that monthly payment towards your DTI. Sometimes you can refinance out of a car. Sometimes, you can pay a car off at closing. There are different situations. So when it comes to you buying a car a year ago, I'd have to review your credit report and your income and kind of see where you land on there. So, and keep in mind through this whole presentation, like each loan is specific to the buyer. So what might work for you might not work for someone else, and vice versa. So we do need to dig into the details of your specific situation. But that's a great question. Absolutely. Um, let's see. Went to see a new build, and it was kind of like a hustle. Yeah, they are kind of like that now. That's very, very true. Malik, thanks for making me feel better. You're welcome. I don't know if that's to me or Todd, but you're more than welcome. What is good savings amount to have pre-approved? Like, what number looks good? Okay, I answered that one. Yeah. Yeah, that looks like all the questions. So really great questions, guys, on this one, especially about, what looks good in the bank. So let's see. I was a stay-at-home for 4 years. I've been at my job for a year now. However, my husband has been at his job for many years and makes 100,000, but his credit is not so good, and mine is 602 FICO. How would that work out? He makes the money, I have the credit. So when it comes to okay, let's talk about your income, and we can definitely get into this on that call. But just real quick, when it comes to income, I need 2 years of your work history, so you can be on the loan. I just can't use your income, so we'd use his. When it comes to credit, we use the lower middle score. You get 3 scores. When I pull credit for you both, you each have 3 scores, and we use the middle scores of each. So now we've got the middle scores of each, and I use the lower one. It's an assessment of risk, so we would be using his income and his credit. But as I review credit for all my clients, for every single one, I look for things that we can do to boost your credit right away. And get you a good loan. So that there may be, something in there that we can do. Maybe pay off at closing, maybe pay off before. We get you a contract, different things like that. Is it better to get a ISDA? I think you meant USDA on that. USDAs are great loans. Absolutely, it's a great loan, but it depends on where you're looking to purchase and how much you make. Those are the 2 main factors for that on there. I've done a couple of USDAs, and they are really, really good deals. So on that call, tell me where you're looking, and I can, search and figure out real quick if that is a rural area or not, according to the USDA.
Yeah, and so like I said, Blake's more of he's a financial advisor and a loan officer. We can get you into actual credit repair with it, where they go in and they dispute your credit history, and we work on removing all the bad things on your credit history, and even if it's like real bad, our program has an attorney that can go in there and work on wiping it out. And that's usually $50 to $80 a month. You'll see small results in 3 months. In 6 months, you'll start seeing some good results. In a year, you'll see really good results. Or there are some really quick, short-term ways to boost it up a little bit. Like Blake said, you want to keep your credit limit on credit cards. Say your credit limit's $1,000. You want to keep it below 30%. So maybe $250, 25%. You want to keep your credit cards down there. Once you go over, you're affecting your credit. It's kind of considered overcharging. And then you don't want to have, you want to have 2 or less credit cards, right, Blake?
Yeah, I would say 2 is pretty good. That way, you've got, it shows that people are willing to buy or willing to let you borrow money. Absolutely.
And yeah, if you don't have any credit cards, get a couple. You can go on to Experian.com. you'll probably qualify for something. Self SELF is a good credit builder program. They basically show that you took out a loan when you really didn't, but you pay them like $40 a month and they report it to the credit bureaus. Yes, and so if you have zero credit, get credit cards, get a couple, charge like $5 or $10 on them each month, and always set up auto payments. So it automatically pays for your payments every month, and there's no way you can miss it.
Yeah, Jacqueline had another question. Are the interest rates better with those loans than others? It's situation specific, but generally the government loans, or at least recently, within the past couple of years, the government loans have had the better rates. But one thing I want everybody to make sure and keep in mind, interest rate isn't, don't always just go with the lowest interest rate. Make sure you're looking at the whole deal, because there is a lot that goes into it. Oh,
Yeah.
here's my loan helper too.
Yeah, and Blake actually teaches a class on USDA loans. Do you want to explain what a USDA loan is real quick? Or
Yeah, I'll kind of reiterate. So it is designed to specifically help rural areas grow. So in doing that, they're trying to get people to move there. So they want people to go to these lower income, lower population areas and grow. Just like we live in DFW and a lot of people are constantly moving here. So DFW is constantly moving. Well, they want the smaller towns to grow as well. So there's that. That's why they offer that. And then that's why they have 0% down. We do need to go through the Department of Housing and Urban Development. We have our own underwriter. Well, has to go through their underwriter there. So it may take a little bit longer, but the ones that I've done have taken just 30 days. We got them knocked out pretty quick. But that's the basis behind the USDA loans. They're really, really good deals. And if you're looking in a rural area, I automatically go to HUD.gov and put your information in there and see if you're pre-qualified for that.
I got a direct message. Wait, where did that go? What area is Fort Worth? Could you explain that? What area is Fort Worth was your question?
That would be, I doubt Fort Worth is going to be a rural area. Maybe parts of Fort Worth are, or some of the towns right around Fort Worth, but Fort Worth is still a metropolitan area.
Yeah, you can still get down payment assistance in an FHA loan for
Sure.
0.5% down. That's a completely different.
Do you know if property taxes increase over time depending on the city, and is that separate from the mortgage? Great question. So property taxes can increase. They definitely can increase. So property taxes are a percentage of the value of your home. So if the value of your home increases, the percentage stays the same, but the amount you pay grows. The amount you pay increases. And that is not separate from your mortgage. We do include your property taxes in your pre-approval. So when I was saying escrows earlier, escrows are property taxes and homeowners insurance. And an escrow account is basically a savings or holdings account where each month you put money into, and your taxes are due on the 31st of every year. So by January 31st, your mortgage servicer will pay those taxes, and that portion of the escrow account will be emptied out. And then your homeowner's insurance is due on your closing date every year. So that's what that is.
Yeah, that's
on-
awesome.
Yeah. Have you